A very good morning here on the 31st of August 2018. My name is Rishi Patel and welcome to the weekly market roundup here at Master the Markets, which of course does the analysis of cross currencies and markets such as indices, stocks, even crypto across the globe, looking at current market trends and what specifically we're looking at in the live trading room here at Master the Markets. Now, those of you that are of course with us on the live trade membership, advanced live trade membership, Vedanta Elite structures will know that in the month of August we don't actively place trades on the market. That is a month off for review and a little R&R really, more than anything. So it's been a great month for us. We've had an opportunity to look back at all the trading strategies that we've built, constructed here at Master the Markets, and we're going to do together actually today, as we can go straight into the topic because there's no specific trade performance review. We can go to the topic of the day, which is going to be an 8-month review, a year-in review for the live trading room strategies here at Master the Markets. We're going to have a look at the current performance, and let's also assess what the current performance is against where we should really be, so we can become very clear for what our targets should be for the end of the year. And of course, this is an excellent way of assessing your strategy's viability. Is it sort of performing in line with the expectations that you had initially? And if you didn't have any expectations, how can you have some expectations, or how do you build that in a strategic, methodological, scalable and reproducible way in order to be able to be consistently profitable? So let's look at that together. So first of all, before I do that, I want to just review a couple of individual trades that we have of course taken into this year. Currently you can see in front of you the Money Bars account statement for the year in so far. So this is from the 1st of January until today. So you can see we have a net profit of £8,141 5 pence there on the Money Bars strategy for the year so far. And we can look at the individual trade breakdown as well here. You can see that it's all been profitable. There have been losing trades in here as well. And of course we can do an assessment. We can do a quick review of some of these. So why don't we start by looking at this one here on the 18th of April, which was the euro dollar. If I drag and drop that onto the chart, you'll be able to see the trade straight away. And there it is. It's highlighted the faint red line. We can make that a little bit bigger. So you can see the trade that we did actually catch here was this one. You can see this little dash here actually is indicative of where the stop loss was for the trade, and this blue tick here, very small blue tick, is telling us where the target is. In fact, some of you may be able to see this, so I'm going to just go ahead and pull open the drawing tool here so that I actually highlight exactly what it is that I'm looking at just here. So if we were to look carefully, you'll see you've got a red dash just there. That is basically where the stop loss is for the trade. This is where the target would have been. So we took this trade short. This is a PSWB here, a Money Bars PSWB, satisfying all the core 8 criteria that we need before we can get into trade opportunity. We entered the market, you can see there pretty much on the close on this particular trade. Stop was, of course, in fact that was not the bar that we entered on. The bar that we entered on was just here. You can see we entered on the close. The stop coming in above the high initially, and then was trailed later on to that level. So that was the initial stop. This is the trailing stop. You can see we progressed that all the way down. We caught the first 4 bars or so in that downward move on the euro dollar. Now looking back at it, we did bank £2,868 on this trade. Some of you may say, hey, but look at the size of the run. I mean, we only caught 128 pips from a move that was had a total actually open equity of 859 pips. So why did we cut the trade off so short? Well, of course, there's no way we can know that, of course, a move will run to such an extent, number one. Secondly, this is the trading strategy, and it gives us a set of rules which we follow in a perfect disciplined way, and you can see that here on the account statement as well. We're not just saying it. Gross £2,800, which we're happy with. And there are other strategies that will catch you a larger move, such as liftoff, which we'll assess in a short while. So that was the Eurodollar trade. It was a profitable one. Let's look at another one. This is a losing trade here on Eurodollar, where we attempted to take the market long. And why don't we assess and review that? Here it is. take a look. This is a losing trade, so you can see that here we lost £1,017 on this trade, which is of course just under 1% of the account, keeping the risk management nice and tidy, which is very important for us. Here you can see we entered the market on the high this time of this PSWB here. So here was your PSWB, that bar. You can see we did trail the stop on that. This was the opportunity for the target just there, which it never reached, but it did open and it did go against us just there. At that time we were stopped out of the market. We took the whole loss just there of £1,017. One more trade on the money bars and then we'll move on, of course. Here is another one that we took on the euro dollar, which was the next trade along the line. So we failed on this long trade, that made a loss for us, but then we took this short trade here once again. We entered on the close of this buyer bar just here. We took the market short, very short move just there. Again, banking 95 pips, £2,446 in that case. There you can see we took that move, and that one was quite choppy, so it was a good thing we got out of the market early on. In that one, total open equity on that move was of course 223 pips, of which we banked 91, which is pretty impressive. Let's then go on. So then you can see that's the money bars performance. What is it in terms of percentage amount? Well, why don't we look at that just here? You can see that if I look at the money bars performance, the current 2018 performance, we are up 8.44% on that trading strategy. Now the question becomes, is that good or is that bad? And how do you then know what the answer to that is? So the way that we do that here at Master the Markets is of course in a structured, quantified and very strategic manner. And what do I mean by that? I mean we have the performance for the previous 5 years, which we can then assess against to see and answer the question, hey, what's the performance like, by way of looking at the historical results. And of course the answer here, we can see in 2013, 14, 15, 16 through 17 what the results were. What I'm going to do just here is just temporarily block out these columns here, which are September, October, November and December, which haven't occurred yet. And so if we take that out, we can actually see, I'm going to total up these columns just here, and we're going to see what the performance was like for each year up until this exact point in time. So what I mean by that is I'm going to look at now the money bars performance from January through August 2013. January through August 2014. An exact like for like as to this year, so I can compare and understand what the performance is like. Now remember, one very important thing is that everything here at Master the Markets is quantified, which means this back testing was done in a consistent, reproducible manner, which means that what I'm looking at now in forward testing matches exactly what would have happened in back testing, making the entire thing consistent, scalable and reproducible. What that means for you is that you have complete confidence and conviction that you're trading a strategy that has scalability. And that's important, because when you go into the market and you're taking sums of money like we are, £2,800 plus, you're looking at needing to be completely confident in what you're doing, and that's what we have here. So that's what we want to, of course, progress all of our students towards, and that, of course, as you know, the Vedanta Elite structures, the Live Trade Mentorship Advanced, take you a large way of the way there, and of course with Vedanta Elite we're able to take you even to the next level to become a completely competent, independent, profitable trader. So let's of course look at the performance here of money bars. So you can see that in 2013 January through August we're minus 4.303% for the year at that point. So at this point in the year in 2013 we'd have been in a loss. In 2014 we'd have been up 3.79% for the year so far. So today we're up 8.44%. So you can see both of these years so far have been outstripped by the current performance of this year. What's matching very closely is this year here, which is 2016, where we'd have been up 8.57% at this time. We're up 8.44% for the year so far, and you can see it's also close to 2017 as well. So the money bars results are currently matching 4 out of the 5 years. Now, of course, in 2015 there was a very large move on the dollar Swiss, which caused the 16.23% profit to be taken, and that, of course, made this an outlier. But other than that, you can see that we are matching 4 out of the 5 years here on money bars. So is this good? The answer is yes. We're matching what we expect in historical testing. Strategy is robust. It's working according to expected parameters. This is a good sign for us. So we'll continue to see what we can look to gain into the rest of the year. And of course, if you look at the results, you can see that some of these years had even greater upside. For example, the 2016 finished off at 10.32%, which means we took some more profit along these final few months just here as well. 9.94% profit in 2014. So you can see that we're on track to achieve the expected results from previous years. Let's look at liftoff. So with liftoff, you can see, again, I'm going to block out the results that are not yet happened. September through December is not relevant for us at this time. Let's go ahead and look at how the performance should have been for the previous 5 years. So you can see currently here up 3% on that liftoff strategy. On 2013, we were down minus 0.96 at this time, 4.92 in 2014, 4.97. So you see pretty much matching up with these 2 years just here, 2015 and 14 at this time. In 16 and 17, we were up hugely, 8.75 and 18.91%, quite large years, of course, and maybe 2017 could be an outlier. We're expecting perhaps a steady return. And if you look at an average of these, if you look at, of course, an average of these 5 years, we have 7.32%, which we're not yet close to. So there may possibly be some more upside here from September through December. But at the moment, you can see it's not underperforming. It's not also overperforming as well. It's matching up roughly around 3 years worth of its performance. 2.98 was the average of those 3 years, and we're coming in at 3%. So you can see we're pretty much matching 13 through 15. But of course, we will assess this at the end of the year to see where it's like. It's possible that it may just have a bad year, and next year may be hugely excellent. We don't know. So we have these metrics that we use to measure and analyze. So let's keep a close check on this. But the live trading room is up 11.43% this year. Of course, from a monetization perspective, for us at this time, we are up £11,097 in total across all the trading models here in the live trading room. So you can see that pretty much on expectation. What would it have been like for a combined performance if we combine the strategies together in the live trading room? So money bars plus the liftoff strategy. You can see if we look at the combination at this point in time, we're up 11.43%. Up until this point in 13 and 14, we've outperformed those years, but we are underperforming for 15, 16, and 17. So of course you can see there may be more upside into the last 4 months of this year. That's what we expect. But again, it's worth reviewing trading models at the end of the year to see if they're meeting the performance expectation. My gut feeling on this is very much that liftoff strategy is going to pick up into the last 3.5 months. Of course, those of you on the live trade membership advanced, Vedanta Elite will benefit from that upside by watching us taking those trades live, real time, and transparently. Pretty much it from me for this market update. Thanks very much for tuning in. Until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.